Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within companies' official filings. Today we're diving into Vistra Corp's latest report, and let's just say there have been some big moves, some massive dollar amounts, and a whole lot of activity. Before we jump in, if you are a fan of getting straight up insights from these official documents, make sure you are subscribed. And for more in-depth discussions and a chance to connect with fellow corporate enthusiasts, join our Discord community through the link in the description below. Alright, so Vistra Corp has dropped a Form 8K, and this isn't just your everyday update. This filing announces the completion of a pretty significant acquisition. Think of it as a major business deal that has just been finalized. This is the official paperwork filed with the US Securities and Exchange Commission, or SEC for short. These filings are crucial because they tell investors and the public what a company is up to, especially when something big happens. The key date here for the main event is the 22nd of October 2025. That is when this acquisition officially went down. The company at the center of this is Vistra Corp, a pretty well-known energy company, and the filing details a major step in their growth or strategic direction. You see some legal and administrative details here, like where they are incorporated and their official file numbers with the SEC. These are important for tracking the company officially, but not the juicy parts of the story. This is their headquarters address. Again, important for official records, but we're here for the business news. And their main phone number, not exactly what we're focused on today, but good to know if you ever needed to reach them through official channels. Now this is interesting. Vistra Corp's common stock is traded on the New York Stock Exchange under the ticker symbol VST. This means the company's performance and actions, like the one we're discussing, can directly impact its stock price and investor value. Vistra is not an emerging growth company. This tells us they are a more established player in the market, not a startup trying to find its footing. They likely have more stringent reporting requirements and a longer history of operations. Here is the main event. Item 2.01 is where companies report the completion of major acquisitions or the selling off of assets. And Vistra has done a big acquisition. So Vistra Corp, through its subsidiary Vistra Operations Company LLC, has officially bought a whole bunch of companies. These aren't just small operations, we're talking about 7 specific limited liability companies, all acquired from a group of sellers. The purchase agreement for this deal was signed back on May 15th. Now for the eye-popping number, the purchase price was a whopping $1.9 billion. That's billion with a B. This includes a base price that can change slightly based on things like the company's cash on hand, their debts, and how much working capital they had when the deal closed. It's a complex financial dance, but the headline is nearly $2 billion changing hands. How did they pay for this massive acquisition? Well, it was a mix. They used cash and also took on the existing debt of the companies they bought. Specifically, they assumed a senior secured credit facility, which includes a term loan that had about $800 million owed on it. So they're not just buying assets, they're also taking on financial obligations. This tells us Vistra is leveraging its financial strength and potentially its borrowing capabilities to expand its reach. The filing also mentions that this description isn't the whole story. For the full nitty-gritty details of the purchase agreement, you'd have to look at a previous filing from May 15th. That is standard practice, but it means this current report is summarizing a complex legal document. This section, item 7.01, falls under Regulation FD, which stands for Fair Disclosure. This rule is all about making sure that when a company releases important information, it is made public to everyone at the same time, not just to a select few. So, on the same day the acquisition reportedly closed, Vistra also put out a press release. This filing incorporates that press release. This is how companies make sure that key announcements reach the public broadly and simultaneously. Now, here is a small but important legal point. The information in this section, including the press release, is marked as furnished rather than filed. This means it is for informational purposes and doesn't carry the same legal weight or liability under certain sections of securities law as a formal filed document. It is a way for companies to share news without being held to the same strict legal scrutiny for that specific release. Finally, item 9.01 lists all the exhibits and supporting documents attached to this filing. This is like the appendix of the report. This is exhibit 2.1, the actual purchase and sale agreement. As we mentioned, it was originally filed on May 15th and is being referenced here again. They've also noted that certain schedules and attachments have been omitted, and Vistra will provide them to the CAC if requested. This is common for very long legal documents where only the core agreement is essential for general public filing. And then we have Exhibit 99.1, the press release we just talked about, dated the 22nd October. And finally, Exhibit 104, which is the cover page of the report itself, formatted in a special way for electronic filing called Inline XBRL. This helps computers read and process the information more easily. And at the very end, we have the signatures dated the 28th of October 2025. This confirms that a duly authorized representative of Vistra Corp, in this case Yuki Whitmire, Vice President, Associate General Counsel and Corporate Secretary, has signed off on this report, attesting to its accuracy. So what does all this mean for Vistra Corp? They just spent nearly $2 billion to acquire 7 energy storage and natural gas companies. This is a massive move, signaling a significant expansion of their operations, likely in the renewable energy storage sector and natural gas infrastructure. The company is clearly betting big on these assets to drive future growth and potentially increase their market share. The use of cash combined with assuming debt shows a strategic approach to financing, aiming to optimize their capital structure, while the exact financials of the acquired companies aren't in this specific report. The sheer scale of the purchase price implies a substantial impact on Vistra's balance sheet and future earnings potential. The key risk here will be how well they integrate these new entities and whether the acquired assets perform as expected. However, for investors, this acquisition signals ambition and a clear strategy to bolster their energy portfolio. Alright, that's our breakdown of Vistra Corp's latest filing. What's your take on this massive acquisition and what it means for the company's future? Drop your thoughts in the comments below. If this analysis was helpful, hitting that like button really supports the channel. And subscribe for more deep dives into corporate finance and strategy. Don't forget to check out our Discord community in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next video.